please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Be excited because of that. There goes the bell, and it's 1/3% higher on the Sensex and the Nifty, 10,775. That's where the markets have opened, and 35,420 thereabouts. 100 up on the Sensex. The Nifty Bank is a shade lower at 1/4% higher, even then 60 points higher on the Nifty Bank. The mid caps are still sulking. Eicher Motors starts with 2.4% with largely inline numbers. Market happy with that. Bharti Airtel is up 1%. ONGC is up 1%. Tech Mahindra, Cipla, Axis Bank continues its rise despite the rise in yields and the rise in the stock itself, 553 now. Z Entertainment numbers due today, and that stock also is up about 0.7%. A lot of the tech stocks are doing well, but so are the banks. Yes Bank, ICICI Bank, HDFC Bank, Axis, all four of them are in the green. What's in the red? IOC, IOC, HP, BP are starting in the red. IOC the worst hit with 1.2% cuts. IndusInd Bank is still in the red, 1% down. And then there is the odd Dr. Reddy's, Bharti Infratel, UPL, which are mildly in the red. So the market is quite firm, very clearly in the grip of the bulls.
Oh yes, even the mid-cap. So the mid-cap index is flat with a bit of a positive bias, but the market breadth is strong. More than 800 stocks on the advancing side versus 360 on declining. The future group stocks are just soaring away this morning. Future enterprises, future consumers, future retail up almost about 3 to 5 odd %. Future lifestyle is up almost about 2.5 odd %. And space is looking pretty good. PC Jewelers ahead of its board meeting is up almost about 3 odd %, so keep an eye out on that. Parag Milk reported a good set of numbers, so that stock as well is holding in the green right now. And a couple of these other stocks, names like Dhampur Sugar, Naveen Fluorine, Syntex Plastics actually reacting on the downside. Syntex Plastics had a pretty weak set of numbers this time. That stock is now down almost about 6 odd % or so. A couple of other stocks to look at. JSPL, by the way, Federal Bank knocked down by 10% this morning. And huge volumes coming in. Of course, this is on expected lines because the numbers were so weak. There was a huge move in terms of slippages, very high slippages for them. So 10% knockdown on Federal Bank. Syntex Plastics I spoke about. Vakrangi is down another 5 odd % today. Ruchi Soya also trading in the red right now. On the upside, Jubilant Life is reacting to its numbers, up about 4 odd %. Eicher Motors is also on the upside this morning, and GSPL too now coming in for some profit taking, actually down about 1.5 odd %. Not a bad opening actually for the frontliners.
Yeah, not a bad opening, but mid-cap index is again in the red. Let's see how it pans out from here. But I think Kajaria Ceramics is interesting. That's holding the low, and that one is now making highs of the morning. Federal Bank, of course, on the other hand, making that low right in the morning itself. Ashwini, your thoughts on market opening, and is there a trade?
See, today things like India Bulls Housing and also IndusInd Bank have opened fairly poorly. So, there is some sort of weakness which is creeping into these NBFCs now. Kotak, on the other hand, has moved higher. So within the financials, I think there's going to be play on both sides. But overall on the index, first up you have about 80-85 points on the Bank Nifty. So chances are that can be chased. So probably get long on the Bank Nifty for the moment.
Okay, yeah, the Nifty Bank largely made of retail banks should not be affected, but the way in which the yield market is opened at 7.73, the NBFCs could have a little bit of a trouble over there. Mitesh, will you play any of the future group stocks?
I think the one which I like is future consumer. I think after consolidation it might break out. The breakout happens at about 60.5, 61, but the indicator setup is quite positive. So if somebody wants to buy, I think keep a stop just below 56, start accumulating. Once it crosses 61, I think we are looking at 67, 68 on the upside. So there's a good about 10-12% kind of a trading play which can happen here.
Okay, well, future retail is just very close to its 52-week high of 656. It's almost at 600 rupees now, so that one's surging quite a bit. Ashwini, what would be the big call for the day?
See, ICICI Pru, I would like to buy into, even if there is some sort of decline. But overall, it's going to be kind of flattish kind of session with some weakness on NBFCs.
Actually, Nifty has given up a little bit, just a little bit of its gains, but let's see how things pan out from here. Prakash, any last thoughts?
I think looks like banks, HDFC Bank and ICICI Bank could see an up move here. Maybe State Bank of India as well.
Okay, that's interesting. Big green bar on ICICI Bank, Ashwini. You spoke about ICICI Pru, but it consolidated yesterday. Do you see a fresh move here?
That is possible. That can happen because yesterday's decline was fairly mild, not even 1%. So maybe that momentum could continue today on the upside.
Okay. Gentlemen, thank you very much for your pre-market and your early morning advice. We will, of course, touch base with you on the hour. We meet at 10 a.m. For the moment, the markets are, well, just a little bit of advantage for the bulls, but the mid-cap space is continuing to bleed a little bit. So the advance declines, which started with, 3:1 in favor of the advances, is now moving towards 1.5:1. So not as bright as it looked early in the morning, but yes, it's just the first 10 minutes of trade. With that backdrop, let's invite our market master for the morning, Tushar Pradhan, CIO HSBC Global AMC India, joins us. Good morning, Tushar. Always good to have you with us. What's the overall sense in the market? Do you think it's a robust market and will move along with global global risk on? Are we going to retest the all-time highs sometime in 2018?
Yeah, it's very likely because one of the things which is a feature of these markets today is that there is volatility. In the past few years, everything seems to be, well known across all market participants. So whether it's the interest rates, which was near zero for so many years, whether it's the infusion of liquidity, which was very consistent and without any question into the markets, into the bond markets, especially in the US, leading to a lot of money for carry trade and so on and so forth. I think for the first time in the last 4 months or so, people have realized that that may not be a given. There are some uncertainties which are coming up, which is, by the way, very natural for markets in general. So I'm pretty enthused about the fact that we are now actually, for the first time in probably after the global financial crisis, coming to a point where we are coming to some sort of uncertainty around whether the interest rates move along with the way that we think they are because somebody is pushing them there, or the fact that the markets actually will determine the price on their own. So I'm pretty much enthused about the fact that it's more business as usual than ever before. Okay,
Tushar, good morning. So in that case, are you saying that we can have an earnings-led recovery in the market, and going forward, do you think overall earnings in the market will pick up?
Yeah, I think that's the case that we've been making for a while now, that while in the developed markets earnings delivery has been very strong for 2 years running now, and the multiples there have to be taken in context with that sort of earnings momentum, as opposed to here in India where the earnings have not been delivered and they have been, I would say, delivered in patches. So the bellwether indexes have not been able to deliver, but I think the broader indexes, especially the mid-cap indexes, have delivered significant earnings growth. But I think if you look at the broad index on the whole, on an average, you get a sense that there has been a lot of under-delivery. If the earnings comes back, then I think the returns are clearly going to come from this earnings recovery that we will see now more in the numbers than which was not really visible in the past few years, I would say, last couple of years. So earnings clearly are the direction. However, I must also say that valuations have not been really cheap over this period. So as opposed to when earnings are not delivered, the PE contracts, we've actually seen the PE expand instead of that, and as a result of which we will have a more of a smoother ride into the earnings delivery as it comes in the next 2 years.
Okay. Tushar, hi. Good morning. I wanted also your thoughts on what's happening with the consumption space now. Of course, we've seen, future group stocks, DMart, etc., be great wealth creators over the past. But now with a big player coming on board, maybe the market pie growing as well, do you see a lot more traction here?
Well, I would say traction.
Oops, okay, we lost that video. We'll do one thing, we'll get back to him in a bit. But for now, the market is looking good. It's actually picking up quite a bit of pace, so don't lose sight of that. The Sensex is now up almost 170 odd points, and the stock that's leading from the front is ICICI Bank. It's up about 1.5%. Tushar, sorry, you were saying about the consumption space and your view there?
Yeah, so as I was saying, that it's going to be more of a fact in terms of how the total market expands. So while what we were always under the impression was that the India market is fairly narrow, as we measured it by the developed players inside, the organized players inside of our market. But we realized that there's a huge unorganized market which doesn't have access to the right kind of goods and services. What we are actually now going to see is that with so many organized players coming into the market, we will see the market expand, which will also lead to a pretty significant competition. But I think for listed players, for more organized players, I think there's a huge market which has just opened up. So I think it is positive at the margin for the customers or consumers, and that will lead to, you know, a significant increase in very organized sales across the country. But I think it is going to be more of a replacement from where they used to shop before to where they now have access to. So in the whole game, I think the organized players will see significant amount of competition. And that is not going to be smooth sailing, and that will all depend on how and what kind of strategy each of them actually pursue.
Exactly.
So yes, to answer your question, there is going to be an expansion, but it's not going to be as even and smooth as we think it is.
No, not a geo moment for the retail players.
Yeah, I mean, see, the point is when you have a geo moment, someone is taking the losses, right? So the cost of market expansion is not really that easy to imagine. And it depends on the deep pockets of each of these players to say how serious are they, how committed are they, and how long do they see this market potential to be. And consumption in India will obviously be driven by a price warrior, and that's how people start to get used to these services and products. So I think clearly, strategy will play a large role. It's not as if just because the market is opened up, everybody makes money. Far from it. So I think it all depends on, you know, each of these strategies as they play out in the market.
But I wanted to ask you also about the corporate-facing banks. That's seen a turnaround after their numbers, Axis and ICICI. You think it's time to look at the corporate banks?
Well, I think the valuations clearly indicate. But as I said, the ability to estimate what's likely to happen in the next 1 or 2 quarters is at best, you know, from the market's perspective, a little iffy. So we are exposed to the fact that could it, you know, trade at even cheaper valuations? They have traded at cheaper valuations. Could it have a surprise saying that, look, the worst is over and then we are actually on an upturn? Then maybe there is a pretty significant upside there. So I don't think it's a very clear thing at the moment, but it's worthwhile taking the risk. I think you have most of the other observables pretty much coming into line. We have most of the negatives out there. I don't think there are any more, I hope not, surprises there in terms of what's likely to happen from an earnings perspective. And we all know that credit growth is picking up, though not in the traditional sense, but somewhere along the line there is some sort of uptick. You're seeing capital expenditure come up, even private capex to that extent. So I think overall it might not be a bad risk to take, but again I would say buyer beware.
Yeah, by the way, the stock that's surging now is Hexaware after absorbing that you know, big correction. That one right now is at the high point. Your thoughts, Tushar, on IT now and you know, after the kind of earnings that you've seen from the large cap IT and some mid cap IT stock companies as well?
Yeah, I think IT has been a surprise throughout this last few months. Almost once everyone had given up, thinking that there is not much of a growth potential. These companies are too large at the top end. The mid caps are fairly scattered. They have pretty significant challenges in terms of growth and client concentration. Just when you thought that this was not the place to be, I think they've sprung a surprise both in growth as well as some significant tailwind coming from a weaker currency, which was never really thought of. And one of the reasons why the earnings also were suppressed last year was that we had an appreciation in the rupee over this period of time. So I think quite a lot of changes have happened. There has been pretty significant change in the industry, positioning, as well as you know, the seriousness that these players are now showing in terms of grabbing market share from each other. So I think a significant fundamental change has occurred. There is positivity in the field. However, the earlier challenges remain, which is we have a challenge in terms of having too little business and too much competition. There is a lot of supply available in the Indian market, And I think the more focused players who really have a proposition which is very attractive from a foreign client's perspective, I think they are the ones who will make most of this going forward. So I think it's again the same game. Have a differentiated offering, be competitive, be there right where the client is, and I think that's where the money is going to be made.
Okay, a final question, Tushar. Yields are not falling below 7.75, no matter what, it comes back there. And yesterday in the bond market, one 15-month PSU bond was dealt at 8.25, 15-month at 8.25%. How will you play this as a stock market person? What will you avoid? What will you buy?
Well, I think the yields are clearly indicating some sort of understanding that credit demand is likely to pick up. They are also feeling that supply on the whole is also going to be significant. I think all of that is leading to some sort of hardening of yields, which we don't actually see in the numbers yet. So that's one indication. The other indication and the implication on stock markets really in that sense is not that negative, I would think, because in a situation where we look back in the United States, where from 2004 onwards to 2007, we had interest rates from a policy perspective going up 25 basis points per quarter, which is a very, very significant move over 3-4 years. That actually was coinciding with probably one of the biggest bull markets in the US. So I think as long as growth is available, as long as the situation in the economy continues to be robust, then higher interest rates really don't mean pretty negative news. But if the growth is not there and interest rates move up, clearly margins as well as profits get impacted. So I think one has to take both of these things with a pinch of salt and then try to see whether the interest rates move in the bond market is indicating a more robust economic environment, or is it indicating a little bit more of a hawkish situation where the control of credit is causing cost of capital to go up.
Okay, well, Tushar, we leave it at that. Thanks so much for joining us and giving us your view on the market. Things are really hotting up with the Future Group, you'd have to say. Future Consumers is now up almost 7%, and Future Enterprises has put on weight of almost about 12-odd%. The view in the market is when Walmart has bought Flipkart, Amazon has bought stake in Shoppers Stop. So will Alibaba buy stake in Flipkart? Because that's, of course, all the talk doing the rounds. There's now a lot of bonhomie there, and PC Jewelers is the other one that's surging right now. But let's take a short break. When we return, we will focus on earnings. Sameer Joshipura, the Group CEO of Sensex Plastics, will join in. And in a bit, Kulin Lalbhai, the Executive Director of Arvind, will also be with us. Stay tuned.
किस खुशी में?
मंडे है। कंजूस बना जेनरोस, कंजूस बना जेनरोस। आज ट्यूसडे है ना? वेडनेसडे है ना? कंजूस बना जेनरोस। पापा प्लीज, पापा प्लीज। जेनरोस। थर्सडे स्पेशल। जब से कोटक सिक्योरिटीज पे फ्री इंट्राडे ट्रेडिंग शुरू हुआ है, ब्रोकरेज भी बन गई कमाई। आज फेशियल और मसाज भी दे दे। जेनरोस।
Investment in securities markets are subject to market risks. Read all the related documents carefully before investing.
Escorts, engineering the fundamentals of growth. India, we are ready.
Welcome back. Well, it's not at all a bad showing for the bulls, though there is a bit of a toing and froing. The market has largely retained, as you can see, 0.25% gains. But let's see, there's just a last 5-minute weakness, especially in the Nifty Bank, which is now dipped to about 0.2%. Not a whole lot different from the 0.4 that it was earlier in the morning. With that, let's shift focus to more corporate earnings. Sensex Plastics reported a weak set of fourth quarter numbers. The revenue declined due to a dip in custom molding segment. Margins also saw a drop. Samir Joshipura, Group CEO, Sensex Plastics, joins us now. Good morning, Samir. Thank you very much for joining us. If you can just take us through the fourth quarter, looks like it was a difficult one.
This year was a year of restructuring for us. You just mentioned that revenue took a dip, although it is because of the prefab segment, not custom molding segment. Custom molding has been growing for us. If I just bridge the number that you are talking about, last year we presented 1053 crores of EBITDA. This year we are presenting 738 crores of EBITDA. And this 320 odd crore of difference where if I have to just bridge it, we have taken a hit of 270 crores of EBITDA in prefab segment. I'll just come to it and discuss it in detail. And we have taken almost 140 crores of hits because of restructuring. We paid a demerger cost of almost 45 crores. This was in Q2. There were two one-time hits in Q4, which is KKR has come on board to us in one of the step-down subsidiaries of SPTL. Again, I'll come to the details of it, and which costed us because of the prepayment of certain loan that we retired, almost 47 crores. And we wind down a US subsidiary. We brought those technologies in India, so we'll manufacture those products in India and ship to US. And that costed us 42 crores. So if I just put all these one-time hits of 140 crores and 270 crores of prefab, the custom molding is doing better than what we did last
actually,
year.
I'm a little confused. Can you tell us exactly what is the growth in custom molding or the degrowth in custom molding and prefab? Both those segments, what were the revenue and EBIT?
I'll just look at the numbers. The custom molding grew by 10% on year-on-year basis, and prefab has degrown by 300 crores over 2,000 crores, so almost 15%. So there has been a degrowth in prefab. This is a business we have been telling since last more than 1 year now that we would be controlling significantly, and eventually we would control it to a level of say 800 to 1,000 crores a year.
But custom molding is also down, you're telling us. That's also down 10%.
No. No, custom molding is not down. The custom molding is growing by 10%.
No, I think you're talking about full year and my colleague is talking about Q4. But just, to give us a full year estimate for FY19, you're now sitting on a base of around 5,500 crores of revenues as of FY18. What kind of growth can you see? Now that most of these restructuring, one-time costs are behind you, what growth are we looking at in FY19?
So, if I just break up the growth in two segments, custom molding and prefab, custom molding should grow overall basis, which is SBAPL for us, 15 to 18% year on year. And prefab should restrict itself to 800 to 1,000 crores. So, it may see an average rate of 225 to 250 crores a quarter.
Okay, then why don't you give us an integrated picture? For the full year, the revenue is overall down by 5% and the EBITDA is down by about 30%, 29%. How will both these likely do? Will they both be higher? Will revenue touch 10% higher?
Yeah, so the revenue overall, if you want to see from 5,600 crores, it should go up by another 10% next year. Which is, I'm saying, current year, 18-19.
Got it.
And the EBITDA should be close to 14.5 to 15% moving forward, just taking away the one-time hits from what we had this year.
So this prefab business of 1,000 crore revenue in FY19, that means there will hardly be any growth in prefab in FY19 compared to FY18, right?
Yes, as I mentioned, this is the business we have been trying to control since more than a year now, 1.5 years, because that that puts stress on our balance sheet. Our focus this year has been improving the balance sheet. So if you look at some of the balance sheet numbers, we have reduced our net debt by more than 500 crores. We have incurred a capex of just 166 crores on a revenue base of 600 crores, which is quite controlled spend on capex.
But what
our working capital is below 60 days.
Sure. No, I'm just trying to understand what is the problem with the prefab business, because for the last many years it was doing fine. Now it started to report losses. Is there a change in terms of customer preference? What seems to be the problem here?
No, from P&L point of view, prefab has always been a good business to have, and however, from cash flow or balance sheet point of view, it used to be a problem because working capital gets stretched in the projects. Most of the customers are government projects. Projects are a little long drawn related to the government policies. Vis-a-vis our custom molding business, which is normally Fortune 500 business, very good customer relationship, very long sustainable business. So if I have to just compare the two business, here my working capital used to get stretched. So on P&L it used to show good, but if you just compare past balance sheet, my working capital used to stretch, and which used to put on stress on my balance sheet.
So just give us a quick idea of how your debt will look in FY19. How much can it come down by?
So we this year we targeted to reduce by 300 crores. We reduced by more than 500 crores. Next year we are targeting, so current year 18-19 we are targeting to reduce it by 500 crores, and let's hope that we probably could do better than that.
Okay, so the long-term borrowing will be below 3,000 crores by the end of this year?
Yes, if you, I mean, there have been two transactions that is in the public domain now. One, KKR has come in at Sensex BAPL level, and promoters have subscribed to warrants.
Sure. Okay, fair enough. We'll leave it at that.
At SPTL level, yeah.
Okay, thank you very much, Sameer Joshipura, for joining us with all those details on Sensex Plastics. Stock, of course, is struggling because of the numbers, the fourth quarter numbers looking weak. We take a break on that note. More result reactions are lined up with Kulin Lalbhai, Executive Director, Arvind.